Thank you very much for staying. Welcome back. Now, the Bank of Ghana has assured it has adequate dollars to meet the demands of businesses and also support Ghana's cedi. This follows the local currency's sustained depreciation against the dollar over the past week. Some analysts have even described the cedi's performance as the worst in the last 8 months. But the regulator is insisting the sustained depreciation is not supported by real demand, as its investigations suggest otherwise. The central bank says it is supporting banks with the required dollars and expects the situation to stabilize very soon. Stephen Opata is head of financial markets at the Bank of Ghana.
We don't think that the local bond issuance has been the reason for the slippage. Let me explain that this bond was issued for local investors, but a significant portion of the proceeds that came was from offshore dollars. That's a foreign currency account. So it's offshore. It's not dollars that essentially was in the system. It's only 20% was onshore dollars. So even though it was dollars for corporations or individuals, majority of it came from offshore. So it cannot be the reason why the cedi has taken this blip. You have to remember that same time last year we did issue a similar bond like that, and it didn't cause that slip. Even if there were some movements, it was not. It did not last for a long time. In the same way, we don't expect this to last. This to be persistent. Even if there's some noise around that, we expect the cedi to recover very shortly.
And for you, what was, because the perception was there was a local bond, and the fact that everybody who had dollar in his or her account brought it out to buy this bond, looking at the mouth-watering rates that you offered.
Mouth-watering indeed. I mean, look, this was 6.25%. I think for this dollar issuance, it's not too bad. Last time this was issued was 6%. But to get to your substantive question, of this issuance of 221, compared to the same period last year. Let me give you some numbers. We expect to end the year by building reserves of $650 million. Okay, we expect to end the year with a current account surplus. Okay, we expect to end the year with a trade surplus. So in general, the external position is good. Our reserves as at now is $7.29 billion, which is equivalent to 4.1 months of import cover. If you look at this, for a small open economy and an economy with quite a diversified commodity base, we think we have sufficient reserves to meet any external shocks and even local shocks that will come. So we think we can meet the situation well.
And maybe, are you also going to increase the intervention when needed if the situation appears to be getting out of hand?
I don't expect it to get out of hand, but if we observed increased volatilities than we are comfortable with, of course we will give more dollars to the market. We'll give what we call balance of payment support. We'll sell more dollars to ensure that there's not too much volatilities that we are not comfortable with.
Don't you think that maybe some of the people, the bankers and all that, think that you are not giving the market enough, you are not present in the market enough, and that is why speculators are betting on these things?
I wouldn't think so. Look, we have a cash flow that we've planned for the whole year, and depending on what's happening, the dynamics, if we observe through our pipeline pool of the market, if we observe there's increased demand from the banks, then we will also increase our supply to the banks. And we've done some of that lately. We also have to remember that there were some ESLA-related dollar commitments, which we've honored a significant portion. So we have enough reserves if we notice that there's persistent corporate increase in corporate demand. We'll supply more dollars to the market.
All right, so currently you would need 4 Ghana cedis, 56 pesos to get $1 from the bank. The Bank of Ghana puts the cedi's depreciation from the beginning of this year at a little over 4%. We're now crossing over briefly to the Kotoka International Airport to witness the arrival of the Kumkum Bajia actors and actresses.
I feel fantastic. I'm getting lots of love and feel really amazed. And I hope we will enjoy for 3-4 days.
Yes, okay. Ebusi afon ti say your mom kind ye they were live airport aha e VIP. Ye be pie na ho na agro ne be so no. Enti say woni ticket akona kwaje o de we hu say Abi Tanu, Alia and Raj Alan live in Ghana. Abi, why is Pragya?
Well, somebody has to work in the family. So Pragya is filming so that everyone all over the world can watch Kumkum Bhagya. So she's making sure the show goes on while we are holidaying here.
Hope you will not go and sleep in the same room with Tanu.
No, I sleep with Raj.
Because I'm watching you,
I sleep with Raj.
Okay, thank you so much. We are going out to meet Ghana. Yes, so let's go. We are live on TV anyways.
All right, so that was excerpts of the arrival of Kumkum Bajia stars at the Kotoka International Airport. It's still live on the marketplace now, and the Institute of Energy Security, IES, has predicted between 3 and 6% fuel price increases with the opening of the second pricing window for the month of November. The Institute's prediction is based on its conclusion the cedi is losing by 0.5% to the dollar, and with rising crude oil prices, which it says will cause all major fuel prices to rise by substantial figures. According to the IES, in the absence of a strategic fuel stock for the country, consumers should brace themselves for possible shocks from the international oil market. Joining me now in the studio for a discussion is Principal Researcher of the IES Richmond, Roxanne Richmond. Welcome to the studio.
Thank you very much.
Now, tell me, do we even have a national strategic buffer stock and to cushion demand in times of price rises like these?
Good afternoon to your cherished viewers. That is exactly what our concern has been. Because when you look at the role of boss, that is what they are concerned. That is their role, that is their responsibility that we expect them to carry out. Unfortunately, as at the last time we checked, instead of having the 12 weeks, we didn't have even up to the 12 weeks that we're expecting. If we had strategic stocks for the first time in 2 years, that's since June 2015, crude oil prices have crossed the $60 mark. So like I mentioned, that's the last time that happened. As we speak, it's around $62. What it means is that if we had stock, we wouldn't need to import directly whilst we have it's at $60, and whilst gasoline and gas oil prices have gone up on the international market. You just release what you have, because our belief and our research shows that it's not going to be on for a long time. OPEC and Russia and some non-OPEC countries are going to have a meeting very soon on 30th November, and it's part of the reasons why prices are going up, because they are looking at arrangement of cutting down production by 1.2 million.
Before we really go to the causes, you've always, highlighted on the stock that we have with BOST. Yeah. How come, if we are not using it, you're taking that into consideration in your data?
Yes, no. What we do is that we always put together the stock that we have, and when you check our recent statement, we said that the inflows that came were even small. We had just around 44,000 metric tons in the country. It's relatively lower than what we've had over the period. And we mentioned last year June, that we expected BOST to expand when it comes to storage facilities, because it's important that we increase our 12-week margin to about 6 months. Unfortunately, that hasn't been done. We thought that the budget would take advantage of talking about the expansion at BOST and even the role of Tema Oil Refinery. We didn't see anything. They will come to.
So we'll come to the budget. Yes. So now, currently, tell me what is actually causing or leading to this prediction that you're currently
as we speak, crude oil prices have gone up on the international market. The previous average was $57 per barrel. As we speak, the current average is around $62 per barrel. That's a price increase of about 7.7%. Gasoline prices have also gone up on the international market by almost 10%. When I say gasoline, is what we call petrol on a regular basis. Gas oil has also gone up by almost 5%, what we call diesel in our regular on the international market. And our cedi also depreciated by 0.5%. Cumulatively, when you check the cedi's depreciation from December to date, that's about 10%, because in December it was around 4 Ghana cedis to $1. As we speak, the average is around 4.5, as Bank of Ghana itself mentioned.
How much exactly is a gallon of petrol going to?
Because it's a deregulated market, every OMC has the price that they sell, but normally we use the average terms. As we speak, the current average is around 4 cedis, 33 pesos for petrol, and 4 cedis, 23 pesos for diesel. But between 3 to 6%, depending on how the margins will go, we expect that it will range between 4.5 and 4.6 for a liter. What it means is that we are almost heading to, or we are just a little over the 20 Ghana mark per gallon.
Wow. What about LPG?
Yes, LPG is also going to go up. LPG is also a deregulated market. The price will increase slightly as compared to before.
Okay. Now, looking forward, do you expect the situation to turn around at the end of the second?
As we speak, in the Asia region, we know that there's geopolitics going on there. Iran and Saudi Arabia have issues. It's also contributing to price hikes in the world. OPEC is also going to have the meeting. Once the production cap is agreed, they are even looking at bringing in non-OPEC members. OPEC they are just 14 countries. Mm-hmm. Once they're able to get more members onto it and their influence grows stronger, they are going to cap production as they want. Once they cap production, like demand and supply, immediately demand over it's more than supply, and the supply cannot meet the demand. What it means is that simply put, prices are going to go up, and that's exactly what we are hoping that won't happen.
All right, so you are saying that if BOST should release its strategic supply of fuel, we're not going to, or we're not supposed to witness any price hikes again?
Yes, what it means is that once you have the stock, you have the stock, you've saved the stock, that's you bought for cheaper margins. Once it goes up and you have about 3 months, you release the stock for 3 months. Once you have trade, you have a trader and boss, and you have someone who monitors the market and understands the market, person will know that definitely in the next 3-4 windows we won't have the same price. Once it has come down at that point in time, then you restock the stock that you release. Otherwise, if you release what you have now and you don't monitor the market, you might end up.
Why would you think that BOST is falling short of this basic?
There are a number of issues when it comes to BOST. Over the period, the strategic stock that they have is an issue now. They had a contract with TSL that was managing their depot. Sure. That's also an issue now. There are a number of issues when it comes to the bulk oil storage and transportation limited, and we are hoping the government will take particular look at that sector and manage it.
All right. Now let's come to the budget. Did the 2018 budget, by the way of energy, did it meet your expectations?
Frankly speaking, we didn't have a lot in the budget. If you look at the budget critically, we didn't have a lot. We expected more than what was put out in the budget. We know that the government has proposed that it's going to reduce tariffs, electricity tariffs, between 13 to 21%. We know that it has to go to PURC before that is even done. We have mentioned already that we thought the government should have had a conversation with PURC before it be announced, because they are the institution in charge, and they would have done the analysis to show that whether it should go up or not, especially when we haven't had price increases or tariff increments since January 2016. Now we want to find out from government, are we going on the same subsidy level where you're going to subsidize, so consumers will pay, government will pay part and consumers will also pay part, or government is going to cut production cost? Once you are cutting production costs, you are good to go. For example, we have thermal plants that run on crude oil, and we have thermal plants that run on HFO, that's heavy fuel oil, or natural gas. Natural gas is relatively cheaper as compared to the rest. The difference between natural gas price and crude oil is almost 1/3. So if you are running a plant that you're going to use $50 million to purchase crude, with natural gas, you'll be using just around $20 million. That is almost 1/3 of the cost. So if we are going to have more thermal plants that run on natural gas, that means our cost of production will come down. Once our cost of production will comes down, definitely government will be able to reduce it. If it is the subsidy way, we disagree, because it's the same subsidies that has caused the energy sector over the period that we have huge.
Are you therefore questioning the sustainability of this current?
We are asking questions because government didn't give details. All the minister said was that they are going to present their facts to PURC for PURC to disclose. I am hoping that PURC will do an independent analysis, and if they feel like it has to go up or it has to come down, they will be bold enough to tell government, and government will not coerce them in accepting the 13 to 21% that government has proposed. In your estimation,
as a think tank, energy think tank, the range with which the finance minister, gave us, do you think it's okay, or you think it could have gone down?
All would depend on the strategy that government is using. If it's a subsidy, even if it's 1%, is dangerous. even if it's 1%, because it's extra cost for the consumer. That's what's the opportunity cost. The consumers will benefit. Electricity tariffs will come down, will be paying less. At the end of the day, what's the opportunity cost to government, the economy, and the energy sector as a whole? Especially when we are borrowing money to settle the energy sector, we are selling thermal plants. But if it is production cost, for that, once the prices are down, definitely governments will be able to do.
Thank you very much. We don't have much time, but finally, before you go, the benchmark that the finance minister pegged crude oil exports, do you agree with that? It's okay.
Yes, I think
$57.4.
57. Yes, in fact, in 2017, the price has ranged around 50, 55 to 57. That's how it's been. Like I mentioned, the first time that has crossed the $60 mark, it's always been around the $57 mark. A quick one. We expected that government was going to talk about oil refinery, because the refinery in January, when the furnace broke down, we said that it wasn't going to work. Government disputed. It's still not working up till now. We know that we have.
They are saying they are doing maintenance schedules.
Maintenance for 11 months. 11 months. We are in November. It happened in January. Nothing has happened. Previously, it was going to expand from 45,000 to 100,000. We don't know what is happening. We have new standards for ppm. We are doing 50 ppm. Tema Oil Refinery does 1,500 ppm. They're supposed to be retrofitting so that the refinery can do the 50 ppm. Nothing was said about that in the budget as well. So we expected more. We expected some tax cuts, petroleum tax cuts on the pricing level, the build-up, so that it can give consumers some relief. Now that we are going to 4.5 per litre, that also didn't happen.
All right, so thank you very much. We would ask these questions from the minister for more clarification. And that was Richmond Roxon. He's a principal researcher of the Institute of Energy Security. We've been talking about the development in the budget, as well as the second pricing window for the month of November, where the IES is predicting between a 3 and 6% price increases in major major petroleum products in the country. Moving on, Vice Chairman of the Trade, Industry and Tourism Committee of Parliament, Atto Panford, has disclosed some Italian businessmen have expressed interest in investing in the Shamar district of the Western region. He noted such investments will not only help turn around the fortunes of the district, but also create jobs for the youth of the area. Speaking to Joy Business in an interview, Atto Panford urged the youth of Shamar to take advantage of the potential opportunities to emerge.
That is where we have our thermal, power being produced. All over the years back is like we produce and distribute, hook onto the national grid, and then it's gone. Now the question is that once we produce it, can't we drop power to be able to utilize it up to prop up our SMEs in an enclave? Thankfully, we also have this free zone enclave, which is already there. Now, as I speak, there is a company there, Black Ivy, taking parts of the free zone, preparing the grounds. If you go there now, you see it on the ground. They are preparing the ground. They are private sector, trying to create their own park as an industrial park for companies or businesses to come and locate there and then run. So Shama is well positioned, to be able to receive this kind of industrialization. So when we have the Italians coming down here to partner with us, making sure that precision, equipment, technology, innovation is done, we will be able to feed into all these, and then we'll create a lot of job for our youth. I'm looking at the youth. It's an opportunity this time, that every youth should rise up. My Shama youth, please rise up. This is the opportunity, and I don't want it to slip anybody, that as we move ahead, we want to make sure that knowledge transfer is also being done. It's about time that we also develop ourselves. And so I think that this is the right opportunity to move ahead with the Italians now.
Now, moving on, Chief Executive of online real estate marketplace Mikasa says his firm's acquisition of Jumia House Ghana would put it in a prime position to better serve Ghana's growing real estate market. The startup acquired Jumia House Ghana for an undisclosed amount, firmly establishing the property portal as the country's largest. Kelvin Nyame has been telling Joy Business what this means for the business.
So yeah, with the acquisition, I think it's giving us more opportunity to serve our customers more. It's giving us more opportunities to deliver, the promises that we continue to give our customers in terms of traffic, in terms of leads, in terms of return on investment. We want people to feel that their business is growing. We want to give them an alternative to marketing, because the traditional market is very expensive. It's not very targeted. There are all of these disadvantages why they can't pick that option. So we want them to see this option as a very resourceful option, a very reliable option, to help their business grow. And we want our consumers who, regardless, will continue to invest, because real estate is like a very basic need, right? It's a lot of deficit. We need more people to be incentivized to build more. But when they build more, we need people to acquire this or to occupy these spaces, right? So we want people who are looking, we want to make it very easy. You don't need to have a lot of money and hassle to own.
Now, it's a year now since the Kwame Nkrumah interchange was opened to traffic. The interchange is located at one of Accra's popular trading hub, originally known as Circle. Now, so 1 year on, how could the facility change the face of businesses there? John Fafali Kofi explores in today's special Friday feature. His report is read to you.
On November 14, 2016, the erstwhile Mahama-led administration held a delightful ceremony to mark completion of the construction and to officially open the interchange to traffic. The three-tier interchange was constructed to replace the Kwame Nkrumah Circle in the center of Accra. The construction of the interchange became necessary when the Kwame Nkrumah Circle, which is plied by over 84,000 vehicles from the arterial roads and their intersections daily, became congested. Traders took advantage to cash in anywhere around they deemed fit, from hawking to settling on pavements. Fast forward to November 2017. Is the story any different?
Before the interchange, the patronage was okay. But after they finished the interchange, in fact, the patronage is very, very low at this market. Then the people passing the pedestrian, they all pass through the market. But after the interchange, they all pass back outside the market. So there's no patronage.
Formerly, it was good and better. And now everything has changed. Everything has turned upside down. And business is collapsing gradually. So it's not like first.
Some traders still hawk on the streets and pavements, while others have gone ahead to create stalls. They lament poor infrastructural planning around the interchange has worsened their already challenged business environment. But trotro drivers rather find their new bus terminal a convenient and safe haven for business. The objective of the project was to reduce congestion, travel time and vehicle operating cost, and thereby stimulate local economic growth. But can one confidently vouch for this?
Yeah, I think if we say that it's service purpose, we need to look at the main reason why the Kwame Nkrumah interchange was remodeled from a circle to an interchange. One was to ease the traffic burden. I know traffic has some negative implications. One, it slows down economic activities, and two, it also is environmentally unfriendly, because at slower speeds, vehicles tend to release a lot of effluent into the environment. And so I believe that when we remodeled it, now there's free flow of traffic, and so in that case it means that we are burning fuel more efficiently. Also, the other issue is that people can come to work and go to back home early and sleep and come back again. That is, I think, for the remodeling, by and large, it has helped, because I used to pass there, and sometimes when you're passing there, you blink your eye and then you passed over the interchange. So I think that with respect to traffic easing, it should serve its purpose, even though there are some challenges of traders and others trying to still take over portions of the road, which normally still creates traffic, especially in the rush hours. But generally, I think that it has helped. One thing that you'd also realize that if we take advantage of the Nkrumah Square, I would call it Nkrumah Square, around the area, it could serve as a mini business activity in the night market, but it should be controlled so that there will not be deaths around. Then also, when
you build such an imposing interchange, it draws vehicles into that area. And so if it draws vehicles into that area, what happens is that people come in, if there are petrol stations there, they will pass there. If there are stores there, they will go and park there and buy things. So the economic activity in the area, I expect it to come up a little bit. If I say economic activity, it's more formal economic activity, not the informal in terms of hawkers.
And on that note, we wrap up Marketplace for today. Many thanks for your company, and of course, do enjoy the weekend. My name is Emmanuel Abuaji. Have a good afternoon.